Welcome back, dear learners. Before the ad break, we did do some adjustments. Here with me, I have more adjustments. I have an application question for you, and it reads, Charlene, the accountant at Great Traders, has traveled overseas on holiday. She has not been able to prepare financial statements. You have been asked to assist in preparing the statement of comprehensive income, but focusing on three main adjustments. Let's see those adjustments. It is the interest, then we have insurance, which includes an amount, which is an annual repayment, and then we have a rent adjustment. Okay, so let us go and see what we can do. All right, so to begin with, interest on the loan from DEF Bank, and then we are given the statement received from DEF Bank, and then the easiest way would be to open a loan account, a ledger account. And then when we prepare a ledger account, we have to understand that loan is a liability, therefore it increases on the credit side and decrease on the debit side. And then we'll come and we say the balance on the 1st of March is 270. So the balance brought down here becomes 270,000. There you have it. And the balance on the last day is 235,000. So I'll come here and the balance brought down is 235,000. I understand that if it's BD here, it will then be CD on the debit side. So I'll come here, then this becomes 235,000. Balance carry down. Now, I need this interest. So what else do I have? Repayments made during the year. I have repayments here of 85,000. So I'll come here, then I'll say bank 85,000. So my bank is 85,000 there. Now, when I come now, I need the interest. The side with the highest amount is the debit side. So I'm going to add these two amounts, 85 plus 235. That gives me 320,000. So here I have 320,000. Then I'll now say 320,000 minus 270,000. Then I end up with 50,000. That 50,000 therefore becomes my interest expense. All right, very important that when you want to get your interest expense and you are given the statement from the bank that you open a loan account, Now that we have our interest, let's go and record that in the statement of comprehensive income. Towards the end of the statement of comprehensive income, you find now your profit before interest expense. It is given to 35,000. All right. And then we now bring interest expense, which is this 50,000. So we come here, we bring it in brackets, 50,000. Then we end up with net profit, which is 185,000. So 185,000 therefore becomes our net profit. Very important, dear learners. When you do these calculations, open a loan account, a liability account. On the credit side, it increases. On the debit side, it decreases. Once you record your amounts in there, it therefore becomes easy for you to calculate the interest. All right, so let me show you when it's neatly typed out. There it is. Remember, here it is a plus and here it's a minus. And your 50,000 must come down there. Then you end up with your net profit. Remember, once you get your net profit, your statement of comprehensive income is complete. Let's come now to adjustment number 2. Adjustment number 2 reads, insurance includes an amount of 1,800. This is an annual payment for the period 1st of August to 31 July. You have to understand that our financial year is ending on the 28th of February. So if we have paid an annual amount which ends on the 31st of July, we have some amounts that have been paid in advance. All right. So we know that our financial period begins in March and it must end in Feb. However, we have paid until 31 July. We've paid until the 31st of July. Therefore, when we are counting our months that we have paid in advance, we start from March, April, May, June, then July, which is this July. So therefore, we have 1, 2, 3, 4, 5 months. So we have 5 months, but we are told this is annual. That means 12 months. 5 over 12 multiplied by 1,800. If you punch that in your calculator, then you get 750. This therefore becomes what we call a prepaid expense. This is a prepaid expense. We then come to our insurance. Then we say the amount from the list of balances, 9,800, 9,800, minus the prepaid expense of 750, 9.8 minus 750. That gives you now 9,050. We understand when we have a prepaid expense, it must also be shown in trade and other receivables as a prepaid expense. So I'll come here, then there is my 750. There it is when it is neatly written. Okay. Adjustment number 3 reads, the rent increased by 400 per month from the 1st of November. The rent for March was received and deposited. So we are supposed to receive rent from March, the beginning of the financial year, until February. However, we have received for the next financial period, March again. So in total, we have received the rent for 13 months. We have received the rent for 13 months. Yet, we should receive rent for only 12 months. But we have this March as an extra month. So we have received for 13 months. If I take my rent of 28,000 and I say 28,000 divided by 13, that will be wrong because some of the months have received an increase of 400 per month. So first I must take out that particular increase before I can find out how much is rent per month. So I'll then say the 400 that I have received as an increase per month, I have received it from November. So I'll say from November, December, January, February. Then the financial year was supposed to end. However, we have received for March as well. This increase of 400, we have received it for 5 months. Which 5 months? From November, 1, 2, 3, 4, 5. So I'll say 400 multiplied by 5. That gives me 2,000. So in total, I have an increase of 2,000. So I can then say, from the rent income that I have, I'll then say the 28,000 minus this increase of 2,000. That means before rent increased, the total would be 26,000. This 26,000 therefore becomes rent for 13 months before the increase. 13 months before the increase. So if I want to know how much is my rent per month before the increase, I'll take that 26,000, I divide it by 13. All right? So you say 26,000 divided by 13. I want you to have your calculator, and then you will get 2,000 rands per month. This is rent before increase. Rent before increase. Then you will come and add the increase. The increase now is 400 because this month of March that has been received in advance is receiving rent after we have received an increase of 400. So in March, it is 2,000 plus the increase of 400. That then gives you 2,400. So when I'm adjusting now, I am now coming to say, remember, my rent before increase is 2,000. Then I come and I add the increase of 400. So the rent that I received, 400 actually, not 4,000. Then the rent that I've received in March in advance is 2,400. So I'll come in, then I'll say my rent income is 28,000. minus the one received in advance, which is 2,400. So I'll end up with 25,600. The income received in advance would therefore become 2,400. Here it is when it is neatly written down. 28,000, this is the amount in the list of balances. Subtract the 2,400, the rent for the month of March, which is after the increase. Then I have 25.6, and then the income that is received in advance goes to trade and other payables, 2,400. Dear learners, let's go for a net break, and I'll see you shortly.